No trades today on FOMC. The hypotheticals were plus $35 on the 250K portfolio, $7 on the 50K portfolio. Live results would have probably created some extra slippage than what we and would have been down slightly. So let's look at the market's crazy FOMC day, and you continue to see this pattern of fighting the shorts and going up no matter what. The FOMC meeting came out, the decision came out here, then the press conference started at 2:30, and the market seems to reverse whatever the direction it went after the announcement. So at 2 o'clock, if the market goes up, then at the press conference it goes down. Today the market went down, and so at the press conference it went up. And so then you can see here the market sold off, and then it ran back up here to take out these highs. And then the market sold off, and then this buy program comes in to take out all this selling pressure, and then the market tried to sell off again, and then it fought back and tried to take out the highs on the day, and it did. It closed up here at the highs. And so even though the advanced decline line went down in the broader index, the ticks were down most of the day. It's interesting because the ticks were just pegging down lower during this time period while the NASDAQ continued to move higher. This is a broader index indicator below, and NASDAQ is narrow, but it's very interesting to see this price action, this continued price action. I posted a video earlier today called the 5-minute dip, and how every 5-minute dip is, I've been saying every 5-minute dip, it seems like they're buying every 5-minute dip, and they are actually. The bulls dip buying programs do buy every 5-minute dip. You can take a look at the results today. It was 2 for 3 today. But I posted the video earlier, and here is what this pattern equity curve looks like over the past year. It doesn't work prior to this year, but it's really a really strong pattern. 5 red candles in a row. You just buy it with a profit target, stop loss, or exit at the end of the day, and then just run up here to the highs. If the market's going to go down, we're going to go up here. We're eventually going to reverse it and take out the highs, and so that's what happened. And so it's almost as if it's some sort of game of trading against these shorts versus real trading. It seems unusual for this price action to continue to trade the way it's trading, all the back and forth price action. Let's look at the NASDAQ strategies. EVP1 tried to go short here. Got a little long at the end of the day, a little long at the end of the day on this one. Viper stopped out. Again, these are the signals. We did not trade these. Momentum reversal up on the day a little bit. Zigzag had 2 good trades before the FOMC announcement, and then on the ES, there was SR counter trend. Tried to buy the dip here, stopped out. Just look at this pattern. Typical FOMC pattern though, but we see more of this type of trading in general, even on non-FOMC days. Momentum reversal, caught a little trade there. Tick count trend, got a short there. Tick fader, stopped out on this short. The opening chop was down on the day. Both of these were down on the day. And so those are, once again, we did not trade. We will pick up trading again tomorrow for Thursday. Thursdays have been one of our top trading days. And so we are currently up on the week from Monday and Tuesday, month, quarter, and year. And looking to work our way out of this around 8% drawdown and live trading, and to go back to equity peaks hopefully by the end of the quarter. And so that's what we're working on. We continue to do research and look at strategies that we published today, like I said, the 5-minute dip. And this the main thing about this is one reason why it's difficult to short this market, is because every 5-minute dip is 5 consecutive down 1-minute bars, boom, buy program comes in. Now it's not always true, but it's true enough to be extremely profitable, as you can see on this equity curve, in ways that it's never been this profitable. So here is one more chart to look at, and just the choppy nature of this uptrend. Looking at the 15-minute chart since the beginning of June, I thought there were several seasons in this where it was making a topping pattern. There should have been a little bit more significant pullback. This is the only real pullback. We had one pullback day in June, but there should have been a little bit more based on this type of price action, this topping patterns. It should have been a little bit more of a significant pullback. It's one down day, and then it immediately rallies, but then starts to create this choppy topping pattern, which I thought should have rolled over again there, but it didn't. It rallied, topping pattern here, kind of choppy. Then it nice trend here, and then choppy pattern here, and then choppy pattern here. So lots of choppy topping patterns. That, maybe not the end of the bull market, but maybe a little bit more significant type pullback than what we're seeing here. This is just since the beginning of June. We've seen this type of price action back here as well. The market, the liquidity is just determined to drive higher and punish those who got out of stocks that are earning between 4 and 5% in fixed income. They're trying to create a FOMO rally where they just push it up, desperately push it up, and so all this safe money runs in here, and then those that are driving this up will then sell it to that crowd that finally throws in the towel and frustrated for missing the rally. They'll run in here to stocks, and then those that are driving this market up will then sell their stocks to them. And so that is kind of how it works. And you could just see it in the tape, the desperate push to move the market higher on any sell-off and not allow anyone to enter at lower prices. So once again, those are the trades on the day, hypothetical trades for Wednesday FOMC day, June the 14th, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.